Good morning, everyone. Welcome. It's nice to see so many faces and people joining. This has been a topic of hot interest lately, and so we're super pleased to have some of our guests that are here today that will be sharing some really practical, concrete information and some of their experiences with applying for federal coronavirus relief funds. But before we get started, we like to start off with both a practice about how to mute and unmute ourselves, but also a kind of universal welcoming all at once. And so we're going to invite everyone to unmute themselves for a moment. So find the microphone icon at the bottom of your screen or somewhere on your screen and click it so you're unmuted. Look at your camera, turn on your camera if you'd like to, so that we can see your faces at least for a moment. And everybody say hi, wave, or make a face or something that shows you're here with us. Hello. Okay.
Hello.
Then everybody go ahead and mute yourselves again. It helps us make sure that we don't have a lot of background noise and echoes getting in the way. We'd love to see more faces if you're open to turning on your camera, but also understand if you want to remain faceless and just we can see your names. So I am Nicole Young, and I'm joined today by my colleague
Nicole Lezin. I had to unmute myself there.
Yes. And we are the lead consultants that are facilitating what's called the Collective of Results and Evidence-Based Investments, or core investments for short. Some of you may be familiar with core investments as a funding model that the county and city of Santa Cruz adopted a few years ago to fund community programs. And in the last couple of years, Nicole Lezin and I have been really working with a variety of different partners, from local government, nonprofits, philanthropy, community groups. We have some of our steering committee members here on the call today, like Keisha, really working together to turn this funding model into more than just a way to hand out funds, that it really is turning into a broader movement to achieve equitable health and well-being across our county for all people throughout all phases of life. And so it's what we call a collective impact approach, where we work on building a shared vision and shared goals and shared strategies for achieving those big goals. And some of you have been involved in CORE, whether you know it or not. If you've ever attended one of our past trainings that we've done on logic models or evidence-based programs and practices, or if you attended a peer learning circle in the past, or one of our larger convenings that we call CORE conversations, those are all part of this broader movement. And what we're doing now is trying to take some of those opportunities for learning, whether it's face-to-face or virtually like this, and put a little bit more structure to them under an umbrella that we're calling the Core Institute for Innovation and Impact, or the Core Institute. And so we recently kicked off this series of virtual coffee chats and have had a great response to them so far. We've done a mix of the more practical how-to type of skill building sessions, like how to use Zoom. And others are focused more on learning about how are different sectors in our community responding to COVID-19, and how can we use this crisis as an opportunity to work collectively and achieve a more equitable, healthy, thriving community even after this crisis passes. So this is the next in our series of the coffee chats, and today we are so pleased to be joined by some special guests. We have David Doolin, who is a local CPA, and he's the managing partner of Petrinovich, Pugh and Company, and he's going to be our primary presenter today, giving us an overview of the Paycheck Protection Program and the Economic Injury Disaster Loan Program, and kind of some key information about what you need to know, things to be considering if you are going to apply, or even if you have already applied and are still waiting for an answer. And we're also joined today. So David, you want to just wave and say hi so people again can see? And we're also joined today by Janine Trame, who is a former accountant and also has experience with the PPP, which is again, the Paycheck Protection Program, and EIDL, which is the short phrase for Economic Injury Disaster Loan. She's the one who created the handout, if you got a chance to see it, that Google Doc that I sent out this morning. So she'll also be sharing some of her tips and guidance based on things that she's experienced or seen so far. And then we're also joined by two of our local nonprofit leaders who have gone through the process of applying for PPP. Keisha Browder from United Way of Santa Cruz County, with a lovely agricultural background behind her, and Jarrod Gibbons, who's the Director of Finance and Operations for Monarch Services. And so it'll be great to have both these two CPAs, these experts that know kind of the technical side of applying for these loans, and two of our very own local leaders who can share some of their experiences and suggestions for all of us based on their experiences. So thank you all for being here. I'm going to ask everyone to go ahead and introduce yourselves through the chat box. Since there are a number of us on this Zoom call, we won't go through and have everybody verbally say their names, but find the chat icon, that speech bubble at the bottom of your screen, so you can open it up and just type in your name and what organization you're representing today, so that we know, get a sense of who's on the call. So I see Clint from CASA, good morning. And Greg from Coastal Watershed Council, good morning. Greg is also one of our core steering committee members. And Mindy from Families in Transition, Yvette from Parent Center, Laura from Bridges to Kinder. Hi, Viviana from Pajaro Valley Community Health Trust. Lots of names starting to scroll by. Hi, Ed. It's nice to see you again on the call. Ed was one of our participants in one of our first coffee chats on how to use Zoom. And Nora from Pajaro Valley Prevention. And is it Jaffer from Art Bias? And Jenny. Hi, Jenny. Looks like Jenny is now with a new organization, Planned Parenthood. Jenny used to work for Digital Nest. And Sylvia. Hi, Sylvia. So go ahead and keep introducing yourselves in the chat box so that we get a sense of who all is on the call. And while you're doing that, I'm going to share my screen to show you the answers that all of you provided when you registered for this coffee chat. And we asked whether your organization has already applied for the EIDL loan and or the Paycheck Protection Program loan. So you can see that most people who registered for this coffee chat have not yet applied for either of those loans, or aren't sure yet whether someone else in your organization has applied for one or both. There are quite a number of you that have applied for PPP and are just waiting to hear whether it's been approved. And our sole respondent who said yes and it's been approved is actually David. So even better that he has that direct experience with PPP and getting the approval. So just wanted to give you a sense of what we heard from all of you. And so that helps us kind of know like where people's starting point is for today. And again, throughout the session this morning, feel free to keep using the chat box to ask questions as we go along. We will have a designated time after David and Janine do a brief overview of these two loan programs. We will have about 25 minutes for Q&A with all of our guests, but feel free to be asking those questions in the chat box as we go along so that we know to keep an eye out for them and try to pull out the ones that are most common that are coming up and have our guests speak to those. But we may also be trying to answer some of them either from, again, the technical side of things or from experience as we're going through the session. And then if you want to give us any nonverbal feedback as we are going through the session, if you click on the participant icon in your meeting control panels, usually at the bottom of your screen, then you will see, I'll actually share my screen again, just to make sure everyone sees that. So like for me, it says manage participants. Yours should say participants. And when you click on that, the list of participants appears in a box. And if you agree with a topic or something someone's saying, you can click yes, or you don't like what you're hearing, don't agree, you can click no. You should see to the left of that green yes check mark a blue hand that you can click on if you want to raise your hand and call our attention to you so that we know that you have a question or something or need help with something. But again, if you either have questions about what the presenters are saying or need some technical help with Zoom features, you can use the chat box to ask those questions. And so Nicole, are you gonna?
Yeah, we're just going to transition now to some slides, and David's going to share some overview information about both types of loans based on his professional expertise, but also his successful applicant experience. So David, as we get the slides up, just wanted to thank you again for taking the time out of a very busy schedule to share this information with the group. And just to echo what Nicole said, as David is speaking, if you have questions, please share those through the chat function, and we'll be collecting those throughout this presentation to ask the speakers later. So David, go ahead.
Well, good morning, and thanks. It's so great to see so many familiar names and organizations on the board this morning. It's terrific, and I'm especially excited to share the podium with Keisha. Keisha was one of the first people I met when I moved to Santa Cruz 8 years ago. We were in the Ag Focus program together, and you can see from her background that she sort of maintained that over the last many years. So it's good to see her. Really happy to have the other two co-presenters as well. The more insights, collective insights that all of us can get, the better that we can serve our community in helping people, do what the federal government has wanted to do from the beginning, which is get the money out into the community and have it used to pay payroll. So if you want to move to the next slide, please. The first thing that I have here, besides our normal, anything I say can't be used against me, but the most important thing here is that things are changing rapidly. We're getting guidance from the SBA, and the SBA's guidance doesn't necessarily line up specifically with the law. Banks are changing and evolving with what they're asking for. The nicer things, if you haven't applied yet, you're going to be the application process is starting to dial down into a much more refined place, and so the changes are happening less rapidly. But the key to this is stay very close to your advisors. Janine, your CPAs and attorneys and the other people on your boards perhaps that are advising you through this process, stay very close to them because the process is evolving. Next, please. So the first thing that I'm going to talk about is the EIDL loans, which these loans go directly through the SBA. I was interested to see the responses, and I think it's very consistent with what I'm seeing in the community, and that is that the response time of the SBA on these EIDL loans is very slow and much less efficient than the PPP loans. So next slide, please. So these loans became available starting January 31st, and they'll continue to be available through December 31st this year. The way to apply for one of these loans is you go to the SBA website, and they have an application that's online. They ask for some financial information and some other general information. It's a pretty easy loan to fill out, although it does have more requirements than the PPP loan. Businesses and nonprofits, 501c3s, specifically C3s and C19s, can apply for these up to $2 million. The amounts below $200,000 collectively are not guaranteed. Amounts above that to 2 million are. So that's something to consider. They say that the approval time is 30 to 45 days. I have yet to have one of my clients approved yet. And we were talking before you joined the meeting, but Janine and I were talking about the one-time grant of $10,000. I have yet, and she as well, have yet to have somebody's $10,000 arrive in their bank account yet. So the 3-day turnaround time is not proven to be the case. The other thing, the SBA issued additional guidance recently saying that the $10,000 is really limited to $1,000 per employee. So you need to have 10 employees to get $10,000. So we'll see where that comes out. There are no, once you get the loan, it's a 30-year term. The interest rate's 3.75%, 2.75 for nonprofits. And it's not forgivable, as is the next loan, but there are no prepayment penalties as well. That's pretty much you can apply for both loans. It's really interesting though, when, and I learned this through a bad experience, when we applied for our PPP loan, it got kicked out by the SBA because they said that somebody else with the same tax ID number applied for a PPP loan or for a similar loan with the SBA, which leads me to believe that if you apply for both loans, or if you apply for PPP loans with two different organizations, which I strongly suggest you don't, you could lead to some roadblocks in your ability to get funding on that. Ours got cleared up very quickly. Somebody made a typographical error, but it does happen. Next slide, please. The bigger program, and I can see from the responses here that the program that people are most interested in, because this is a loan that actually can turn into a grant, is this payroll paycheck protection program loans. Next slide. These are loans that you've been hearing about. And the key to remember when you're thinking about a paycheck protection loan program loan is there are two pieces. There's a loan piece, and then there's a forgiveness piece. And everybody is really focused on the loan piece right now. And rightfully so. We're telling our clients and everyone who we talk to about this to don't worry about the forgiveness piece yet, but go out and get your loan as quickly as possible. You can see that B of A, that's just kind of an interesting stat. They received 85,000 loan applications on the first day, totaling $22 billion. I'm told that the SBA has 3,300 total employees, and there are hundreds and hundreds of thousands of these loans being filed. So what we've learned from this is that your bank is your gatekeeper. And what we're going to find out later is that there's the law, and that's one piece of it. There's what the SBA guidance that has been issued is another piece of it, and then there's what your bank tells you that they want you to do. And what we're telling people is follow what your bank tells you to do, because they're the gatekeepers. They're going to decide whether or not you get the loan. They're going to decide whether or not your the package that you put together of backup information is appropriate. And they're the ones that you want to satisfy, because they're the gatekeepers to get you into the SBA system. The way that you determine how much you can borrow under this loan is a calculation. And that calculation is the average monthly payroll over the period of a year. The actual law itself says that period of a year is the trailing 12 months. So it would be 3/31/2020 back through April 1st, 2019. The SBA has issued guidance that if that's too complicated for you, you can use your calendar year ending 2019. So you take the monthly payroll and you take any of your employees that make more than $100,000, you cap them at $100,000. You add up that total. You add to it the amount that you pay in a year for health insurance and any pension contribution. You add up that total and you divide that by 12 to get your average. You multiply it times 2.5, and that's the amount you can borrow. The amount of backup, what we're telling people to add it for backup for the banks, and again, each bank is different. County Bank in Santa Cruz actually has a pretty extensive requirement for documentation. Some of the other ones are less. But at least they're going to have you take your quarterly payroll reports that support the amounts you applied for, copies of invoices for health insurance, and the amounts you contributed to a pension plan, if any. Next slide. So the terms of the loan are that it's a 1% interest rate. And this, again, is another thing that changed in the process. It started out as a 4% interest rate over 10 years. Now it's a 1% interest rate over 2 years. Payments are forgiven, or the payments after the forgiveness are deferred for 6 months. And interest will accrue during that six-month period of time. The loan proceeds, at least 75% of the loan proceeds need to be used for payroll costs, and I think most people, that's where they're spending their money. They can also be used for rent and utilities and mortgage interest payments if that's relevant for your organization. Next slide, please. Who's eligible? Employers of less than 500,000, sole proprietors, 501c3 and C19 nonprofits are eligible. Most of you, I think, are C3s, so it's definitely something that you should be looking at. Next slide. So this is the grant part of the program, and this is the loan forgiveness piece. Now, the SBA has not issued formal guidance on this yet, on how they're going to interpret a lot of things. But the general rule is that the amount of payroll that you pay for the 8-week period, beginning with the issuance of the loan, and the question is, you know, in the law it says origination, which could be the date you sign it or the date it's funded, and that's not clear yet, but they should be relatively close. And just keep, you know, explicit documentation of the amount of the payroll you pay in that period of time, and the amount of rent and mortgage interest and utilities. The whole purpose of this loan is that you maintain your payroll. So if your organization has cut the salaries or put people on furlough or laid off people, there's a provision in the loan that you can still get forgiveness if you reinstate them by June 30th. But all of this, you know, the guidance on this hasn't been issued yet. What I would say is, if your FTE is dropped in this period of time compared to the same period last year, that you need to be very careful going forward about restoring that payroll, because that could affect the amount of forgiveness during the 8-week period. Next slide, please. The SBA has a list of, for those of you that don't have a bank that you're using on a regular basis, and a lot of people, this has been a challenge, because I said banks are the gatekeepers. If you don't have a bank you have a relationship with, then go to this SBA website. That will provide a list of banks. Maybe you can find a lender near you, that somebody you can establish a relationship. Next slide. So finally, I just wanted to kind of go through some things that we've learned in this process. Number one is ask the bank the information that they want and then give them what they want. That, again, I can't emphasize that enough, and I think I have emphasized it a lot already. The $100,000 compensation limit, I don't know how relevant it is to your organizations, but it does not include health insurance or pension contributions. There was a bank that issued a template that basically showed that it was included in there, and that's not the case. If they ask for a calculation of how the funds are to be used, be sure that 75% of it is used for payroll. Don't worry about the forgiveness. Get the loan first, and it's not too late to apply. We know that a lot of people have already applied. We don't know how much of the money has been used already, but we do know that the federal government is very interested in getting this money out there, and so it's very likely that they continue to add to the pool as long as people continue to apply.
Thank you.
That's my piece.
Great. Some of you have been asking questions of David through the chat function, and you've already met Janine Trame, who has been answering them. So thank you, Janine. And now we're going to hear directly from Janine with some additional tips and suggestions, as well as walking you through the resource that she shared that Nicole Young emailed earlier. And Janine will continue to answer your questions. We've been collecting some of the ones that have been coming up through the chat. And then we'll also have a chance after Janine's presentation to hear from Jarrod and Keisha about their experiences as applicants. So hang in there and keep those questions coming. We'll keep collecting them. But Janine, would you like to just amplify some of David's points from your own perspective with some tips and guidance?
And I put some notes together last night, so I'm going to be reading from my notes.
Thank you.
So just to also clarify, because there's a bit of this going on in the chat, the EIDL is a pretty basic, or what I'll call like a regular business loan. Why it's getting so much buzz right now is because of this $10,000 grant. And the reason they're calling it a grant is because it's a $10,000 advance on that loan that you don't have to pay back. But it is $10,000 that is being, up to $10,000 to David's point, in timing with the application of that loan. So it's, you're applying for this sort of regular business loan that the restrictions on what you can spend it on is, there's almost no restrictions. You can kind of more or less spend it on whatever you want. I mean, there are some vague stipulations, but what's special, what everybody's like buzzing about is this like free or like $10,000 that is an advance on that loan. To David's point, I've known people who have applied. I don't know of anybody that's received the grant or received the loan through EIDL. But that's kind of why everybody's sort of talking about that particular loan program. The Paycheck Protection Program is, what's exciting about that is it's basically a forgivable loan for 2.5 months worth of payroll. So in theory, you could pay all of your employees for 2.5 months, get that money up front, and then a portion of that, up to 100% of it, is forgivable based on meeting certain criteria. To David's point, your head count or full-time equivalents, that's what FTEs is, if you don't know what FTEs is, which basically means if you have 2 half-time people, they equal 1 full-time person. If you maintain your previous levels of FTEs and you maintain your previous compensation level, there's like a 25% threshold. So if you were to reduce pay by 25%, that's okay, but the excess over 25% is what you'll get dinged for. So if you had 10 employees and you kept 9, your loan forgiveness would be reduced by that 10%. If your total compensation was $1 million and then it became for annually, and then it became 900K, you would also get, your forgiveness would also get reduced by that 10%. So you're not going to be kicked out per se of the forgiveness by reducing, but your forgiveness will be less. So even if you do apply and you do end up being in a situation where you are reducing your headcount, it's not necessarily a bad thing. You're just not going to be, that loan isn't going to be forgiven as much, but you'll still have, you still have most of your people, and you still have the comp level is still mostly the same. You're still going to get most of the forgiveness, basically. It's just reduced for the amount of people, and the amount of your compensation goes down more than 25%. So that's why that's exciting. What's not as exciting about it is that there will be some pretty like stringent guidelines for how you have to prove what you spent it on. So this will be a paper trail situation that you will need to make sure you're proving that you spent those funds on the things that you spent it on. To David's point, initially when they came out, they said, oh, you can spend it on payroll and rent and utilities and your mortgage, but not your mortgage principal, only mortgage interest, blah, blah, blah. And then they came back and said, okay, you need to spend at least 75% of it on payroll. So there's a little other things you can spend it on, but it's materially meant to be spent on payroll. Let me see, what else do I have? Oh, and the other thing I wanted to mention is that the EIDL will not like run out. There's not specific allocated funds for that, because it's basically like a regular loan with this potential advance. But the PPP, because it is a forgivable loan, that's why people are talking about the funds running out, is because of that forgivable portion. The funds for that forgiveness is what potentially could run out. There has been no guidance given that the funds are gone. So if banks are telling you that the funds are gone, that's not real. I've heard of just a lot of people that don't have existing relationships in banks kind of getting the runaround from banks, because to be fair, it's a great loan for the borrower. It's not a great loan for the lender. So I think there wasn't a lot of incentive for banks to take on these loans, because it's not a great business move for them. The good news is the Fed just came out and gave an incentive to banks to hold these loans. I won't get into why, because it doesn't matter. And they also provided additional funding for this. So there's more money that was just released. I think it was on Thursday or Friday of last week, as well as now there's an incentive for banks to hold these loans. So I'm hoping that people will start to see more traction with banks, and that it won't be as sort of so much of it, to be honest, just like a pain in the butt, where people are calling different banks and kind of getting the runaround and stuff like that. And then just to reiterate what David said, to maintain the maximum forgiveness for the PPP, if you had to furlough people or you had to reduce salary, so long as you true up and come back to that same level by June 30th, you'll be okay. And you'll still be able to qualify for maximum forgiveness. Also, I had this in my notes, and I know this might be slightly controversial to say, but the FTEs, you're not counting people, you don't have to count people one for one in that, like, not to throw you under the bus, Nicole, but like you could lay off Nicole Young and you could bring on a different person, and that would still count. So if you do feel like you needed to do a restructure for whatever reason, and you were like, okay, maybe I'm too heavy in marketing and I want to bring in some more program people or whatever it was, if you were maintaining your same comp level and your same headcount level, that would still be okay. So this could be a good time to do a restructure if you were going to, so long as you just net bring back the same people, the same number of FTEs, and the same, and your comp level is the same or more. So something to consider. A lot of people have asked about independent contractors. Independent contractors are not part of payroll because they're not employees. Independent contractors themselves, if you're concerned about people in your organization that are independent contractors, they themselves can file for unemployment, and they themselves can qualify for the PPP as their own sort of individual business. But they shouldn't be part of your payroll calculation. Similarly, if you have a volunteers as part of your organization, they're not employees, so they don't count, you don't pay them, so they are not to be included in any type of payroll calculation. And the whole point of the PPP is to encourage organizations and businesses that have employees to be able to retain them during this time when things are really uncertain. So if you think about what the objective of this program is, it's for organizations that have employees to be able to hold on to those employees, and the government is more or less funding that payroll during this uncertain time when organizations are struggling.
Janine, thanks for those additional comments, and David. We see some questions coming in about, are there any reasons that you would identify for not applying under these programs, and also asking for more details about the timeline?
I would say my one concern about not applying for the PPP is it is a loan. At the end of the day, it's still a loan. And you will only qualify for the forgiveness if you really retain the same level of employees. If your organization is in a situation where it's becoming very obvious, like for example, one of my girlfriends, she has a restaurant, she had to basically cut her entire staff. She doesn't know when she can bring those staff back. June 30th is the current date that for the PPP to bring people back. Who knows how things are going to change in the next several months. If the shelter in place is extended until August 30th, I don't know, I'm just making things up, and they don't change this program, you could still be on the hook for this loan. So it is still a loan that you're meant to spend on payroll. If you don't spend it on that payroll and you've still taken out this loan, it's still money you have to pay back, right? You could take it out and immediately pay it back if you just were like, I changed my mind, I don't want to do it. You could do that. But I think it's important to consider that it's still a loan. It's not free money. It could be free money. We hope, if the cards play out right, it could be free money, but it's still, at the end of the day, is a loan. It's still money to be paid back. So I think that's, for me, the important thing to consider is it's still a loan.
And a specific question is, if you use the loan for payroll but are later reimbursed by contract, is there a specific way to deal with that in tracking the use and forgiveness of the loan amount? I will say the advice I've sort of seen around is for the PPP itself, and the EIDL is different because it's a larger amount. It would be a larger amount, and you can spend it on more things. But for the PPP specifically, the guidance I've seen is to deposit that into a bank account of its own, and so then draw from that account for your expenses. If you were reimbursed, that reimbursement, I don't know. David, what do you think about that in terms of how you would handle that?
That's a great question. And very often nonprofits do have, these types of reimbursements. And the question is, did you really have the payroll if your payroll is being funded by the PPP? And I think that's really specific to the contract you have with the funder. I totally agree with you about using a separate bank account and paying those expenses out of there and focus more on the expenditures. And I see some confusion, and it's definitely my fault. I mentioned the word grant. I call it a grant because basically it's a forgiveness, but it's definitely not technically in terms of a nonprofit a grant. So please don't be confused by that. But what in terms of you're documenting how you use the money, I think you're definitely using it for that. And then if you have a contract that says that it's going to compensate you for paying a certain amount of payroll, well, you paid it. You just happened to paid it from a loan that was ended up being forgiven. So that would be my argument. But I think it's contract to contract.
Thanks. And any other insights about the timeline? A couple people have asked about that, and I know that's murky so far, but do you know anything about a cutoff or anything else about the decision-making timeline?
Well, the cutoff is June 30th for the payroll protection program, but but I can tell you that, you know, and I've got a number of clients they're going through this process. The first day that it became available at the SBA was on April 3rd. We filed on April 3rd. Our bank spent that was a Friday, all weekend long working with me on changing the application, updating the application, adding more information. Wednesday the following week, our bank approved it, uploaded it to the SBA website that Wednesday, and this past Monday, it was approved by the SBA. The SBA guidelines to our bank is that you have to fund the loan within 10 days of getting the SBA approval. We don't have loan documents yet, but we're going to probably get them this week and sign them. And I've heard of clients that have had their loans funded already and they don't have signed loan documents. So,
Wow.
you know, it's definitely happening now. I saw this morning something get issued from a bank saying that they'd expect the loan to fund within 10 to 15 days. And this is another client that received, and this is through County Bank, that they got approval. So, you know, I mean, it's happening now.
Some hoops through, but once they line up, in your experience, some of the money is starting to flow.
It is. Thank goodness, because that's the intention.
So I wanted to hear from Keisha and Jarrod as well, who are from the applicant point of view that many of you on the call would be in. Do you have any additional tips or guidance from your experience to augment what Janine and David have already shared?
Sure, yeah, I can chime in if that's all right with you, Keisha. Actually, I would like to add to Clint's comments of the reasons for not applying and John's question about the contract reimbursement were actually the two primary considerations our organization was looking at before we applied for this, because like I'm assuming a lot of nonprofits, you already have your grants and contracts and foundation funding lined up, and you have allocated your operational costs, including payroll, for that fiscal year. And so for us, that required us to move around the allocations for us with this influx of revenue, because for our contracts and all the contracts that I'm familiar with, you can't pay your payroll from a different funding source. So it's a one-for-one. This contract is expected to use that contract for your payroll. So what we've done is we've reached out to our city and county and foundation funders to see if we can modify the structure of the contract to make them unrestricted funding if they were funding a specific program that will allow us a bit more flexibility to move around the allocations. But again, that was a big reason that we almost did not apply for this, because now it's moving around the allocations and keeping our documentation in line that we can say we used this loan for our payroll for the next, through June 30th. And then what did we do with our current contract and grant revenue is maybe allocate that out if it's allowable to, client aid is what we're really planning on, is trying to increase our client aid budget and community assistance budget. But those are the two main things that I wanted to mention with that, because that is a challenge if you've already basically allocated all of your expenses across different grant sources for this fiscal year.
Okay, Greg, I'm hoping that helps answer your question. That may have been where that came from. And Janine is answering in the chat about the suggestion for a separate bank account. Keisha, did you have anything to add from your applicant experience?
Most of it has been said. It was a pretty basic application. I will say that there was the pre-application, maybe a one-pager that we filled out, but just like David said, just to support him, very important to connect with your banks, have that relationship with them. From there, it was important for our board to approve this. So if anyone is interested, I can share with the different MPOs a template of how I approach the board to get their approval of us going after this kind of funding, getting their approval, lining up Yes, I will do that. Lining up all of the paperwork, the documentation that you're going to need, having all of that ready to go. But again, your lender, your bankers will have that list for you, that checklist. And just like what Janine was saying about that timeline and David was saying about the timeline, it was relatively quick. We haven't been approved, but within that 24 hours, we were able to hear back, okay, you're ready for the next steps, set up a username and password, upload this information, and you'll hear from us within 3 days. So tomorrow will mark day 3. And so far so good.
I see Janine is reminding all of us that we're in uncharted waters together, and so some of that guidance is just not there, and we just don't know. And this is kind of the best informed guess about ways to protect yourself going forward and what kinds of things to pay attention to. So thanks for that reminder, Janine. And let's see, are there other questions that we have not answered yet? Feel free to field those in the chat function, and we'll try to direct them to.
And I actually asked a question for participants in the chat box that if you're willing to type a response would be great, because it'll help us think about, again, how we might use some of these coffee chats to be useful, or if there's any way we can kind of help use this core investment structure to guide some of the conversations with other local jurisdictional funders. So just like Jarrod talked about having the opportunity to talk with local jurisdictional funders about restructuring contracts and where there's flexibility, so that you're setting things up in a way where you can clearly justify using loans for payroll expenses and traditional grant contract funds for other things. I'm curious whether others have tried to have similar conversations with local jurisdictional funders and how that's gone, and if there's any, if that's an area of support that would be helpful for us to think about how we might help play a role in that.
No, that was a golden nugget from Jarrod. Thanks. And I'm proud to serve on Jarrod's finance committee with Monarch. So thanks for that nugget. And I think CORE could play a role in helping us advocate for that kind of opportunity, because a lot of our nonprofits have contracts. And if they were able to help us move that, where more could apply for this funding, that would be great. To have CORE's voice at the table as well.
And hopefully help them see that it saves them some time and energy to have one broad conversation versus lots of little or separate conversations with lots of different nonprofits.
Yes.
And just to highlight, Greg is mentioning in the chat that he has a different relationship with his board, and so it may not be necessary to take the steps that Keisha took. So in case that's helpful to people who have that same kind of latitude, just different models, different ways to do it. Okay. Any other questions for our panelists or for each other? Here's a question from Megan. How long does an organization have to hold on to the loan to be able to apply for and receive the $10,000 grant? Can you cancel the loan before you receive the grant and still receive it? So Janine, David, do you have insights on that?
I'm going to make a guess, but you can pay back the loan immediately. All of these loans have no prepayment penalty or whatever. So to the point of, if you decide you don't want it anymore, you could immediately pay it back. It's with the EIDL specifically, it's just a little bit more confusing on the timing of everything, because the original 10K grant was supposed to be, or advance, supposed to be an emergency advance on a loan. Like, I'm running out of money, I applied for this loan, I need this $10,000 today to keep my business going. However, what we've seen is that's not the case in terms of the timing of people getting funds. So in theory, if you applied and you got your 10K advance and then your loan was funded a week or 10 days later, you could just pay back that loan immediately with no penalty. It does seem sort of like a lot of work to go through for, this relatively small grant, but I don't see why not. But it also, at this point, this is the slowest one that we've seen.
Okay, thanks. I see David nodding there.
Yeah, I totally agree with everything you're saying. And it's not, you don't cancel a loan, you just wait till it funds, you turn around and repay it. But it's a lot of work to go through for $10,000. $10,000 that frankly isn't being issued the way that we thought it would.
And Greg, I see that you have your hand raised. Do you want to ask a question? Greg, if you'll unmute yourself, go ahead. Oh, yeah, well, meanwhile, another question is the idea that entities that have already taken out a loan before are getting approval at a faster rate than ones that have an account at an eligible bank but have not taken out a loan. Do you know anything about that, Janine and David, anecdotally or otherwise?
Yeah, I mean, we were told initially from our bank that that borrowers are their priority, maintaining their, because they're essentially protecting their loan by offering this other loan. In the end, as this thing has sort of marched on for a week or two, I feel that that's changed dramatically. And hopefully, as it goes forward from here, a lot of our clients really had difficulty because they didn't have a relationship with the bank in general, and they were banking at a Wells Fargo or a Bank of America, and the real relationship side of that just doesn't exist. So those loans are starting to get funded now, and so I appreciate that that's changing. But initially, I think that was correct.
Okay, thanks, David. Greg, do you want to ask your question? Still, go ahead. Greg, I can't hear you. I see that your mute button is off, but maybe there's a volume issue, or if you just want to pop it into the chat, we can ask it that way.
I just also wanted to add on to Kayla's question is that the other thing is on the bank side that for anybody that applies for a loan, they have some due diligence that they have to do in terms of just like your credit worthiness and stuff like that. So if you're a brand new customer, especially brand new customer to the bank or just have never taken out a loan with them before, that's going to just be that they have to just go through that like check, right? Whereas if you've already taken out a loan before or whatever, you have good credit, whatever, that process just necessarily is going to go faster because that original like creditworthiness check has already kind of been done, and you can move to step 2 kind of, where instead of kind of skip step 1 and move to step 2. So it's not necessarily a like we don't like you thing. It's like, or we don't know you. It's more like we don't know you. We have to do steps because we're a bank, you're taking out a loan, blah, blah, blah.
Thank you.
And Janine and David, is this a situation where if people have submitted and they're not hearing anything back, should they just sit and wait, or because everybody is so swamped that they might not get a response or might annoy the banks if they're constantly asking for updates, or like how active should people be about following up?
I think you should definitely be a squeaky wheel. You really should not apply to through multiple banks, because you are only meant to get one of these loans. And if the off chance your loan at one bank advances and then somehow the other one that was really slow now goes, like, you could be in the position where you have now applied for and were granted funds through 2 banks, which would be a really bad place for you to be because you're only supposed to have one. So I would say choose the partner that you think is going to be best to help you and stick with them. And yeah, call them every day, send a little email, just make sure. But you have to be sensitive to the fact that these people are all going through this for the first time too. As David mentioned, every bank is going to have a different application process. They're concerned about making sure that they do their due diligence, blah, blah, blah. Everybody has a different risk tolerance. So you can imagine some people are like, oh, sure, yeah, push that through. And some people are like, no, we really need to check this thing. And so it's going to be a little bit chaotic. But I'm always a squeaky wheel person. That's just my nature.
Okay. Thank you.
I can't emphasize enough, do not apply through two separate banks. The situation that happened with us, because they do match ID numbers at the SBA through the application process. And if there's another one in there, they're going to kick it out. And it can only hurt your chances of getting into the program if you do that. You know, like Janine said, and it's great advice, find a partner and stick with them, and then stay on them.
Okay. Thanks. We still have Greg's question in the chat, and Keisha's got her hand up, but we need to close out in just a minute. Nicole and I can hang out for a few minutes, and we'll be trying to collect all of these questions in the chat and hope to have Janine and David continue to weigh in. But let's see, Keisha, did you have a wrap-up comment you wanted to make, or question?
Well, I wanted to get David and Janine's opinion. We could have a situation where some nonprofits are the fiscal sponsor for multiple smaller nonprofits. How, if we have to have that matching tax ID, do you all have any advice on what we can do on how to help those smaller nonprofits who use a fiscal sponsor?
I'm going to let David speak to this.
Outside of the nonprofit world, we see this situation a lot. Multiple tiered companies, and the application form itself actually has a provision for affiliated companies, and so what we're doing with them is having sort of the umbrella organization make the application, but provide the affiliated companies down below it. You give them a tax ID number, and then accumulating all that information and sending it off. And so far it's worked.
Thank you. We're unfortunately out of our official time. So Nicole, do you want to close us out, and then we'll hang out for a few minutes as well?
Yeah, and we actually wanted to get a sense of not only how helpful today's session was. We'll send you a link to a satisfaction survey. Nicole Lezin's going to type that URL in the chat box so you can copy and paste it before you leave today's session, but we'll also send it in the follow-up email after today along with the link to the recording of today's session. But we also wanted to get a sense of if we scheduled a follow-up Q&A session next week, April 21st at the same time, how likely would you or someone else from your organization be to participate in that live session? Janine has said that she could be available next week. We'll, if David is available, we'd love to have you back as well, and any others that want to be able to just have a more casual Q&A session, no structured presentation, just a chance to kind of, you know, say, hey, here's what I'm encountering, or here's what question came up, what guidance or responses anyone have. So give you a couple more seconds to fill out that poll so we can get a sense of whether we should move ahead with planning that. And I'm going to end that poll now. And so it looks like almost half of you are saying yes, definitely, that you would participate in a follow-up Q&A session next week, and another almost nearly identical percentage, about 41%, are saying maybe, that they'll have to check with a colleague. So feeling like that's probably enough to go ahead and schedule another follow-up Q&A and put the word out to everybody, including those that may not have been able to participate live today. So just wanted to say thank you all for participating. Again, we'd love your feedback through the SurveyMonkey survey that Nicole Lezin posted in the chat box. We'll share the recording of this session within a couple days. It'll be on the Core Investments YouTube channel. And in addition to next week's kind of informal Q&A on this same topic, we're planning another coffee chat on April 28th. We're hoping to have that one focused on resources for undocumented families and individuals during this time. So now that you have participated, you were all on our email contact list until you tell us to kick you off. So we hope to see you back at another coffee chat.
Thanks, Nicole. Thank you all for your service.
Thank you. David, yes, go ahead.
I just want to thank the two of you for putting this together. I know I learned a ton through this. Janine and Keisha and Jarrod, all you added a lot to my knowledge. So thank you very much.
Thank you all.
I always feel exactly that way with these.
Yes, and Jarrod and Keisha for sharing your experiences too. That was really helpful.
Yeah, I think everybody got something out of this, and we'll keep going with the same conversation next week. And just always a lot to learn, a lot to adjust to, but meanwhile, stay safe and healthy, everyone, and we'll see you next week.
Thank you.
Thank you. Bye.
Bye-bye.